Live from London, I'm Guy Johnson.
And in New York, I'm Bonnie Quinn. This is Bloomberg Markets.
Time now for Futures in Focus. Let's get down to the CME. Oil under pressure. We saw the data a few minutes ago. We're waiting to see what's going to happen this weekend with the G20. We're going to have some of the big heavyweights in Argentina. Then we've got the OPEC meeting coming up. Bob Iaccino of Path Trading Partners joins us now from the CME. Bob, what did they make of the data down there, the EPA data and the build that we saw? And what's the positioning like going into the G20?
Well, good morning, Guy. Obviously, the build's a little bit more than expected. It's a series of consecutive builds now. We got the draw on gasoline, which helped shore futures up a tiny bit. We were down about a little bit over than 0.75%. The data comes out. We dropped down to a little bit more than negative 1.25%. It's around negative 1.3, and have rallied a little bit from there. I think that's in the refinery utilization part of the number that jumped up to 95 and change on the percentage. That actually leads crude oil prices in the very short term, because that is end point demand. That's refinery demand combined with the gasoline draw. You may be starting to see a little bit of a base here. It may not be today, but it may be coming.
Okay. Bob, what's the positioning like ahead of Powell? What are people saying he's expected to say?
Well, everyone is expecting / hoping that he's going to take more of a view that Clarita took yesterday, saying that we're pretty near the neutral rate and we should be data dependent, which many people assume means equity market data as well as economic data. So that's what these guys are hoping for down here. I think they're positioning for that as well, but they'll be quick to dump that out. I don't know that Jerome Powell's going to do that. It's almost a contradiction when you saw that a few weeks back. He talked about not knowing where neutral was. Then his vice chair says we're close to neutral.
Bob, just very quickly, the Fed just said in its statement at the bottom of the hour that it's worried that if the trade tensions continue to rise, that we could see a significant correction in asset prices. How much of that significant correction is priced, and how big could it be if we were to see this trade story carrying on?
Well, I think the significant correction already happened. They must be talking about a bear market. I don't think all of it's priced in. I think people are expecting the Fed to cool down if Trump and Xi Jinping don't come to some sort of at least announcement of an agreement.
Bob, great to see you. Thanks very much for joining us. Bob Iaccino joining us from
Path
Trading Partners.